Hello, this is the Chart Profit video, just over an hour into the trading day, Friday 2nd of June. This is the pre-open, looking at the E-mini S&P on a very minor time frame. The point of control migrated higher yesterday to 2413. This level here, the whole of yesterday's value area was actually printed above that, and we marked aggressive buying at the top here. That's the green at top, as the E-mini recorded a new high. Longer term support is quite a way down now, 2384 down here, so concentrating on these minor controlling prices. The minor point of control was 2411.50, just migrated slightly higher. If we look at those levels on a half-hour chart for the live E-mini, this was 2411.50, and you can see the support overnight here prior to yesterday's price action. A little bit of support at 2413. Assume that the controlling price migrated on this time frame in here somewhere, and we saw support there, rallied pretty strong yesterday, and we marked aggressive buying up here. So this level now is the first level support. That's 2413 on a very minor time frame. As I said, pre-open previous day, bonds and gold have moved to a stronger price location. Oil has moved weaker. This is down here. Not an ideal scenario for equities, but as long as the E-mini holds that minor point of control, it's in a strong price location on the minor time frame. So even on that minor time frame, E-mini giving no indications of weakness so far. Obviously price down here below that level would be that first indication. Also mentioned that the breadth numbers improved. I suggested we look at the numbers here, which is the percentage of stocks in those lists greater than their 50-day moving average. These are all back above 50, and also suggested looking at the pulse chart, which is here. So we're back to green at this point. Price momentum at the bottom still above zero, indicating trend up from this point here. Momentum was falling across this period, as it usually does, back to zero, which came in close to the low. Picking up from there, and we've marked aggressive buying here, and as I mentioned yesterday as well. So at the moment, as we break out to this new high, the pulse chart looking pretty supportive. Looking at the sentiment here, my version of the Ridex assets ratio, as you know, on the 1st of March, printed above 14 for only the second time, which was an indication of over-enthusiasm. The market worked that off a little bit. We fell below 8 over here last week, which was a 71-day low, close to this low here. The market now breaking out to a new high, and the Ridex level fairly subdued, not chasing the market higher, suggesting the private investors a little skeptical. And as I wrote last week, when we hit that 71-day low for the ratio, this is a contrarian indicator. This is most likely a positive. Interestingly, both the bull fund assets this week have picked up. By both, I mean bull fund assets and the bear fund assets in isolation here have picked up a little from a very, very low base. That pushes the total assets that I follow to just about the highest level this year. So there's an increasing interest in the market, bullish side and the bearish side, an increasing interest. Highs in the market usually come in when total assets are elevated, and they're not at the moment. If we are going to experience some kind of blow-off move in the market, we'd expect to see this moving pretty rapidly higher. We will monitor that. However, interestingly, in the public poll from AAII, the bulls percent, actually, excuse me, that was an outdated graphic. The bulls percent this week fell from 32.9% to 26.9%, and the bears slightly increased from 30 to 31.5%. So there's been a decrease in bullish sentiment this week in that poll, maybe reflecting a little bit of the sentiment in the Ridex data as the market moves higher. This poll suggesting they're fairly cynical. And if we look at the data from Lipper US fund flows, although this week we did see a net inflow of 9.2 billion in the week to the 31st, which was the largest single weekly inflow in 15 weeks, the 4-week flow, that's the black line at the bottom here, still below zero. Let's look at some of the charts. This is the spider. Closest reference level I have is here at 238.50, which is the 2-month support. Russell 2000 ETF IWM 16-month at 136 was probed earlier in the week, sharply higher from there. This wasn't much time here spent below there. Time spent below this level would be the first indication of weakness on this chart. Intraday today, the FTSE 100, UK's FTSE 100 has hit a new all-time high here. Closest support, however, is the 5-month down here at 72.95. Looking at bonds ETF, this is TLT, reached its highest level since last November. Today, back in March, it found support at what was the major point of control at 117.15. That moved to 119 at that point there. We've held that ever since. In the current distribution, the controlling price is 121.63, and we're currently holding that. And we've had what looks like a higher low, which is always a bullish pattern on the bonds there. As I mentioned earlier, bonds and gold have moved into stronger price locations. This is a strong position for GLD, the gold ETF. The major is here at 119.84, currently printing above that. The halfway point of the previous high comes in a little below that, the dotted blue line, consolidated on it there. This is a pretty strong position for this chart. Price back underneath this halfway point around 119, so price back down here would put this strength in doubt. If you follow the pre-open comments each day, you'll know that we follow oil. This is the United States Oil Fund, USO. I've mentioned that oil has been in a weak position for weeks since this point over here, when the major point of control moved to 11.44, and then we saw a sell-off underneath that level. I brought in the 4-month here at 10.28, which is a more minor level but useful, and you can see that oil is printing back underneath these 2 points in a weak price location. I think this could become a problem for equities and risk-off assets. And if we look at the halfway point from this important low over here, this dotted blue line, we're currently printing underneath that on the low of the week. So gold, a strong chart, this one a weak chart, I think. Pre-open comments each day for the dollar index have remained pretty much the same for a good number of weeks. The fact that we rallied back from the March low to probe the major point of control in early April, that probe into resistance was rejected. Chart remains in a weak price location for the dollar index. There was that rejected probe at this point here into that controlling price. The big support on the chart is down here at 95.57, which is the 2-year point of control. That could be attractive, and today actually we've printed the lowest level for the dollar index since November. Likewise, the Euro FX chart, almost like a mirror image, found support here at the 7-month and has rallied ever since. The major is up here at 113.29. That could well be a good resistance level, and again probably an attractive level, so it could well be probed. Also been saying that the pound dollar chart here, 15-month at 124.78, as long as the chart remains above that level and that controlling price does not migrate, chart is in a strong price location. And the closest reference I have on the dollar yen chart is the 4-month at 113.61, which was probed and rejected. And again, unless that 4-month migrates, as long as we're below it, this chart, as I've said in the pre-open each day, remains in a weak price location. Just going to review this chart that I showed at the start of May. It was May in the 7th year of the decade, from the decade cycle. So it had a tendency to be fairly strong for the first few days of the month through to about the 5th, and then there was weakness on this idealized chart down to about the 17th, and then usually a rally from there. Here's what actually happened based on the diamonds. Apart from this little rally here, it's pretty accurate. Here's the last 9 decades for June in a 7-year. We're looking here all rebased to 100. It's pretty mixed. 4 of the 9 end the month below where they started, and 5 actually above. That's not a really strong bias, but showing you the average chart, we see strength from the start of the month again through to about the 18th, 19th, and then some relative weakness to the end of the month. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.